All right, welcome back to Nadlan Forum Podcast Daily, everyone. Ruby here with Lior, and today's episode has already thrown me for a loop, mate. Lior, did you see that jobless claims figure? I feel like we've had more economic surprises this year than I had late night kebabs back in uni.
Yeah, Ruby, I know exactly what you mean. I actually had to check the number twice. So initial jobless claims fell to 218,000. That's way below what everyone expected. Analysts were looking for something closer to 235,000. It's almost like people bet on rain and got sunshine instead, right?
Totally. And it's funny because just a couple episodes ago, we were talking about all the jitters in the labour market. There were worries after that little bump in claims earlier in the month. Yet here we are, and the data's like, nah, we're good. But what stands out for me, beyond just the headline, is why we're not seeing more layoffs, even with slower hiring. That's almost more interesting.
Exactly. So if you look deeper, continuing claims only nudged down by about 2,000, now at 1.926 million. It shows that people who are already on unemployment are staying pretty steady. But companies just don't want to let anyone go. We see hiring activity slowing, fewer job postings, all that, but businesses are like holding on to workers for dear life. And the volatility in places like Texas doesn't even change that broader trend. Texas, by the way, saw jobless claims drop by almost 7,000 last week. But that's unadjusted, so you got to take it with a pinch of salt.
That makes me think, I had this experience in Sydney years ago. I was working with a big media firm, and the whole industry was spooked after some scary revenue numbers. No one was getting hired. We're talking a complete freeze, but nobody got the axe either. Management was almost defensive. Like, we've invested so much in the current team, we don't want to lose know-how, even if we can't afford to bring on anyone new. It sort of feels like what we're seeing now. Businesses just might not want the headache of rehiring and retraining if things pick up again soon.
That's a good comparison. I mean, we're definitely seeing companies act on the side of caution. Maybe they remember how hard it was to hire during the post-pandemic labor shortages. Why repeat that mistake? Also, there's noise week to week in these numbers, but you can see from the broader economic data that the sky's not falling. Actually, GDP was revised up to 3.8% growth for the second quarter, which is, I'll be honest, way stronger than I personally expected. Consumer spending's up, durable goods are rebounding even after a July drop. Appliances, airplanes, computers, they're moving again.
Yeah, that part threw me. I mean, spending on durable goods was supposed to drop, but went up nearly 3%. I always feel like the economists are just covering their eyes and tossing darts at a board sometimes. But I suppose it checks out. When consumers keep spending, companies hang on to staff, even if future hiring's slow. And not to drag us totally off track, but last episode we were on about mortgage rates. And those rates were holding pretty steady despite all these crosswinds. It's like every data set is telling us something a little different, but they're all whispering resilience for now.
Yeah, it's a mixed picture for sure. Even with strong GDP and those durable goods numbers, the labor market isn't completely out of the woods. The Fed is watching. Powell basically said, look, things are changing, but we have tools left in the box. The markets expect 2 more rate cuts this year, October and December. Nothing set in stone, obviously, but if hiring really starts to slip, you might see more action from the Fed. It's a little like everyone's waiting to see who blinks first. Companies, consumers, or the Fed.
It's a good point. And not to get all doom and gloom because it's Friday, but we still have inflation worries and that weirdness in the housing market. Wait, actually, new home sales did jump in August, didn't they? Massive, like 20% or something. We went deep on that a couple of episodes ago, so if you missed it, go back and have a listen.
Good memory, Ruby. Housing finally showing some signs of life, even after that rough patch. I guess, to tie this all together, what we're looking at is a labor market and a broader economy that refuses to quit, at least for now. But, next month it could all flip. Just like with the weather here in New York.
Seriously, don't pack away your umbrella or your resume just yet, folks. That's all for today. But don't worry, we'll keep tracking all these twists and turns, and next time, maybe we'll have yet another unexpected number to talk about. Lior, thanks for another fun session.
Thanks, Ruby. Always a pleasure. And thanks to everyone for tuning in. See you next round.
Catch you soon, everyone. Bye.